Meet Marcus Lemonis, the multimillionaire who'll spend $2 million of his own money to fix a failing business and transform the people who run it.
And if you don't like it, you can pack your and you can go home.
The Prophet, Tuesdays, CNBC Prime.
Hi, everybody. Welcome to On the Money. I'm Maria Bartiromo, coming to you today from outside the New York Stock Exchange. Stocks stumble just weeks after hitting record highs. Is this a correction or a summer stall? Two top market watchers on what the numbers say about the health of the economy and your money. Are the suburbs dead? Some say the American dream has packed up for a new neighborhood. A look at the good life, block by block. And making the grade before the kids go back to school. In a big season for retailers, we'll get the inside look at what tomorrow's generation of consumers want today. On the Money begins right now.
This is America's #1 financial news program, On the Money. Now, Maria Bartiromo.
Here's a look at what's making news as we head into a new week on the Money. A cool down on Wall Street this week. All the major indices took a tumble, suffering the worst 1- and 2-day drops in 2 months on Wednesday and Thursday. Also, that led to a fall in the price of treasuries. Investors are preparing, of course, for the Federal Reserve's eventual winding down of the bond buying program. Also driving a concern on the street, a key earnings disappointment this week from Walmart, the nation's largest retailer, largest employer, citing weaker sales and cutting its outlook for the year. Technology bellwether, meanwhile, Cisco warned that uncertain demand for its business technology products will lead that company to cut as many as 4,000 jobs. It's 5% of the workforce. Emerging markets really an issue there. It wasn't all bad, though. Fewer U.S. workers are being laid off. The weekly count of initial claims for state unemployment benefits dropped to the lowest level since October of 2007. Charges have been brought up, meanwhile, in the J.P. Morgan Chase London whale investigation. Manhattan's U.S. attorney has brought conspiracy and wire fraud charges against 2 former traders known for outsized derivatives bets that led to a $6 billion loss for J.P. Morgan last year.
Regulators need to be even more vigilant. And as I have been saying for some years now, companies themselves need to pay closer attention to the cultures that they create.
And elsewhere, an airline delay making news. The Justice Department filed suit to block the proposed merger of U.S. Airways and American Airlines parent company, citing a concern of reduced industry capacity. The proposed merger would create the world's largest airline with more than $40 billion in annual revenue. So how did the market move? Set up Wall Street for the week ahead. Barry Knapp is head of U.S. equity portfolio strategy at Barclays. And Zachary Karabell is president of River Twice Research. He's also a columnist at Reuters and The Atlantic. Gentlemen, good to see you. Thanks very much for joining us. Barry, what a week we had, right? Triple-digit losses. We had a couple of rough days. Biggest sell-off in the market since June. Do you think this is the beginning of a correction that a lot of people have been calling for, or is this a buying opportunity?
No, it's part of the typical Fed policy normalization-related corrections that have taken place basically after every recession and then recovery rally that has occurred since World War II. You have a long period of stocks advancing and the Fed easing, and then the Fed finally decides, as the data gets better, that it's time to normalize policy. Look, our broad theme is that we think the economy is getting better and we've reached a real inflection point. Things like lower public policy uncertainty has boosted capital investment, labor investment, so things are generally getting better.
Yeah.
But the market's discounted that. We are up 20% year to date.
Well, we are up double digits for sure, all the major averages. So, Zach, everyone's talking about the Federal Reserve and when the Fed is going to start, lowering that stimulus, beginning to wind down the $85 billion in bond purchases a month. What's your take? When do you expect the tapering to begin?
I mean, 2 things. I think market participants invest this, pun intended, with a lot more weight psychologically than it probably has literally, meaning we live in a world of $60-70 trillion of securities floating around between bonds and stocks, and while the Fed is buying close to $900 billion of those a year and then revolving them, it's still not a moving needle kind of event when you look at that as a global thing. It's a psychological thing for the markets right now because people believe that the Fed and central banks are determining rates. And because they believe it, they then believe that this will then determine rates. I mean, there's a self-fulfilling reality here. I think the reality is bonds are the thing to look at much more than equities right now as an area of volatility, because that's the thing that's going to be most impacted by the Fed. Stocks are kind of in their own world in that it's corporate earnings, it's what's going on in terms of global growth. And while we tend to lump these together as one conversation, they really are 2 very different conversations.
But, I mean, we saw some weak economic data this week.
Yeah.
Given where we are in this anemic recovery, can the Fed begin to wind things down this September?
Well, this is what they're trying to figure out. Like, how long do you can maintain this before it becomes a permanent policy? And we're already close to it being the new normal, right? They're not increasing it, that we know. The question is, when do they decrease?
But Barry, I mean, I know things have improved, but can we really see the Fed to begin the tapering in 30 days?
Oh, absolutely.
Really?
Absolutely.
You think the Fed starts next month?
We do. And what's really interesting about this is if you go back through all these cycles, there's been a discussion, for example, about low readings of inflation. Maybe the Fed shouldn't do it because they're missing their 2% target mandate on the downside. In 1983, 1994, 2004, the last three cycles, inflation measures were falling. One factor started to improve, and that was the labor market. And it always begins with the firing slowing, which is falling jobless claims, and like night follows day, the hiring starts, and we've had a pickup in the labor market, and that's what triggers the start of the normalization.
Although you may not get any meaningful inflation, period, in this global system right now. There's high productivity based on technology, low wages based on the fact that the rest of the world is emerging, and while wages are rising in the rest of the world, they're nowhere near what they are in Europe or the United States. I think we could have, a new normal of an extremely low inflation environment for many, 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 many years.
I guess the reason that I don't believe that tapering can begin next month is because of the two targets, the metrics that the Fed has put forward. Unemployment at 6.5% and inflation at 2%. We're nowhere near either of those.
Yeah. Well, first of all, unemployment at 6.5% is really a target for raising interest rates. And they've gone to great pains to separate the taper from the actual rate policy. What's really fascinating about this is go back to last September, and things in the labor market were getting better. Capital investment was weak amidst all the public policy uncertainty related to the election. But essentially what the Fed did was they were risk managing against the risk of the U.S. taxing their way into recession like Spain, Italy, and France did last year. We now know that that didn't happen. The consumer responded better than we thought they would to the tax hikes, and the economy didn't weaken all that much.
Let me switch gears, ask you about the other big story, and that was the activist investor is back. And we saw so much drama around JCPenney this week. Activist investor Bill Ackman, who holds a sizable amount of JCPenney, I believe it's 18%. Then you had Carl Icahn tweeting about his large position in Apple. This trend of shareholder activism, is this a positive thing for the markets or a negative?
My perspective on this, and I'll be a little bit of a historian, even though the real historian is sitting next to me, is that when you think about how creative destruction works, a famous Austrian economist named Schumpeter who talked a lot about this, in the 80s, when I was first coming into the business, there was a whole round of corporate raiders, and they were viewed negatively, but they were all the focus of the media. And what they essentially did was they forced corporate America to restructure. And if you think about it, in the current environment, we've had massive amounts of cash build up on corporate balance sheets, companies afraid to invest because of all the public policy uncertainty. And these activist investors are forcing the issue with some of these companies. So they are a positive force for change, in my view.
Yeah, I mean, I'm going to take the other side of this. I mean, Icahn actually connects the raiders of the 80s, and he was part of that, to the activist investor today. I think a lot of activist investors, and I put Ackman and Loeb in this category, really don't know and understand the operating businesses that they're going after. They think they do. They think they understand the balance sheet part of it. They don't understand the operating part of it. And a lot of the businesses that activist investors go out of does not take brain surgery level IQ to figure out that the businesses are hurting. It didn't take like, oh my God, JCPenney is having trouble, for someone to come along and let the board and the investing community know that, nor does it take Carl Icahn to let us know that Apple has an awful lot of cash that they have neither returned to shareholders much or been able to use productively. So I think there's a lot of ego involved in activist investors. I think there's a lot of Wall Street hubris that it believes that it knows how to operate operating businesses. I just don't think that's true.
Yeah, I mean, that certainly is the criticism. Well, it feels like they're back. We'll see the impact on investors. Gentlemen, thank you very much.
Thank you.
Appreciate your time today. Barry and Zach, we will see you soon. Up next on The Money, are the suburbs dead? What the Great Recession did to the American dream, and it doesn't include a white picket fence. And later, it's that time of the year again. Back to school shopping season is in full swing. Which retailers are getting the top grade from consumers and their parents? Take a look at the stock market and how it ended the week. Back in a moment. bearings, many question if the American dream of a nice home with a white picket fence will survive the aftermath of the Great Recession. Here with more on the suburbs' demise is Lee Gallagher. She is author of The End of the Suburbs, Where the American Dream is Moving. She's also the assistant managing editor of Fortune magazine. Lee, good to have you on the program.
Great to be here, Maria.
Thank you so much for joining us. So, what makes you say that we are seeing the end of the suburbs?
Well, it's funny. I mean, there's actually a number of indicators that really pretty convincingly show that our love affair with suburbia, suburban America as we know it, is coming to an end. And there's a number of reasons behind that. And some of them are due to the financial crisis and the housing boom and bust, but many of them are not. Things like the rising price of energy, when we built our housing landscape in the suburban pattern way back in the 50s, it worked well at the time, but we just kind of grew and grew and grew, and the model sort of grew outsized. So you have people spending a lot of money to get to work, 3.5 million people spending more than an hour and a half each way to get to their jobs. It's just not sustainable.
Which is why people are moving to the cities.
Yes, many people are moving to the cities.
And that's all over the world,
yes,
by the
everywhere.
way, right? But your prediction is not for all suburbs,
no,
right?
That's
you say
right.
that there are some communities that will be fine,
yes,
and people are still gravitating there, particularly those close to the cities with public transport.
Yes, exactly. The future is one sort of urbanization everywhere. So what that means is basically people want to be closer to the things they need to do every day. And what that can mean an urbanized suburb, or a suburb that is kind of built on old-fashioned sort of villagey models, the way they were before World War II when we kind of mass-produced everything. So those places will be okay. Every home builder and developer is falling all over himself to try to build more of these places because there aren't enough of them. But people want to be where they can live closer to the things they want to do.
How does the housing market comeback play into all of this? We know that there are signs that housing is coming back, but if the suburbs are dying, that could financially trap millions of homeowners, right? Many of them baby boomers.
Yes, I mean, millions of homeowners already are trapped because of the housing crisis we've been through, and many baby boomers are actually not moving. They're staying in place for a number of reasons. One being that they're trapped in their homes. But the interesting thing about the housing recovery is that if you look at it over the past year or so, in housing starts for multifamily construction have done a lot better over the past year than single-family homes. The percentage increases, they're really, you can see that shift in the housing starts. So, when we rebuild, when we come back, the big question is how are we going to do it? It may not be in the exact same way.
What about municipalities? Because we know that there's already stress on so many local municipalities. An exodus from the suburbs may mean a dwindling tax base.
It may. And in fact, I actually have a chapter in the book about the tax revenue based on the suburban model. It's different when you have low density. You're not pulling in as much property taxes per square mile as you are in a denser environment. So the suburbs, I have one source in my book who thinks the suburban model is basically a big Ponzi scheme. Maybe a little out there, but this is what he thinks. And that's because to fund, the only way the revenue can sustain the maintenance for all the infrastructure of the suburbs, which is lots of sewage and infrastructure and wiring and everything, is to keep growing because the density levels don't sustain themselves from a tax revenue basis.
How are the cities accommodating this influx of people?
Rents are going up, prices are going up
Sure.
in cities like New York City. I mean, lots of other cities are much more affordable, so I think New York is an outlier where that's concerned. But cities are booming. They have, more sidewalk cafes and restaurants and multiplexes than, the suburbs used to in many ways.
All right, we'll leave it there. Lee, great to have you on the program.
Thanks for having me.
Thank you so much, Lee Gallagher. The new book, The End of the Suburbs. Thank you for being with us, Lee. Up next on The Money, schooling major retailers as summer winds down. We are shopping for answers about consumer sentiment this back-to-school season. And then a notebook made from last year's homework. Really? Surprising student supplies saved from the trash heap. Back in a moment. Welcome back. The dog days of August, prime time for retailers with a look at the all-important back-to-school season. I'm joined right now by Jason Wagenheim. He is Teen Vogue's Vice President and Publisher. Jason, good to see you again. Thanks for joining us.
Thank you.
So appreciate it. So lots to talk about. Last year's back-to-school season was particularly successful for retailers, right? What are you seeing right now broadly in terms of back to school?
Well, we are coming off this $84 billion season that was last year. We're definitely off to a sluggish start. We saw some earnings reports this week that indicated that sales in July weren't what everybody had hoped for. But as we move into August, we're very optimistic at Teen Vogue. 8 out of 10 of our readers told us this week that they intend to spend the same or more as they did last year, which is encouraging.
Really? Break it down for the generations for us. Tell me about the ways young shoppers shop The millennials, for example, are they different from Gen X or from boomers?
They're wildly different, Maria.
Really?
This generation has more influence than any generation prior for two big reasons. First is the technology aspect. They are tweeting and posting and pinning more than any generation ever could prior. They've grown up with technology. The second thing is the brand loyalty landscape has really changed for them. They're considering as many as 48 brands every time they walk into a store before they make a purchase. So it's tough to capture that loyalty long term now, and retailers are trying more and more to do that.
I know you've done a lot of research into the millennials. I want to hear more about it. That brand loyalty. Is it an emotional connection that they form with retailers? How does it happen? What makes them come back and back and back?
Yeah, there's four important things. The story that they're allowed to tell with brands that they purchase and love keeps them coming back. They're looking for deals and insider information. They're looking for the cause. Community is really important to them. And they're also looking for the showcase, DIY, and things that can really show their own expression of their own fashion and beauty style.
I see. And do you know some retailers that are very much, the loyalty for the teen group?
I think H&M is a great bellwether
H&M.
brand for teen fashion right now. They spend a lot of time and money marketing their Conscious collection, which focuses on the social and environmentally responsible materials and products that they use to produce their fashion.
When we talk about major retailers in the news, like this week, Walmart, for example, they had a stumble. You had JCPenney struggling with leadership, their board activist investors. Is there a trickle down to the 16-year-old? I mean, they may not care about activist investors, obviously, but how does it trickle down?
The average 16-year-old doesn't know who Bill Ackman is, so that's for sure.
Yeah.
I think what these things do, unfortunately, as a side effect, is they cause a distraction for retailers in really focusing on multi-channel marketing approaches. You have to be connected through web, social, mobile, and the bricks and mortar experience if you're going to connect with this consumer now and capture brand loyalty. So rather than focus on this back-to-school season, as we look for years and years beyond, retailers that don't capture that experience now are not going to be as successful as others.
Let's talk about pricing right now, because I guess it was a cold spring. And as a result, some stores have excess summer inventory. Does that mean prices will come down? Will we see deeper discounting?
We are seeing this unfortunate trend with longer term discount periods. We created an event called Back to School Saturday last weekend, which was wildly successful. These short-term event-based programs are great. The long-term discounting is a bit more of a struggle for these retailers.
So you said earlier you think that we are going to see a better next couple of weeks going into the school season. Yeah. What are you expecting?
We're expecting it to be, consumers are cautious right now. They will spend more, but they're making their dollars go further. And they're continuing to want to create 24/7 relationships with these retailers across all the platforms that matter to them. So the more multi-channel marketing that we see from these retailers, the more success we'll see.
Great, really good stuff. Jason, thank you very much.
Thank you.
Great to have you on the program. Jason Wagenheim joining us. Up next, school supplies made from recycled garbage. Yes, it's trash to teachable moments, and a look at the news this upcoming week that will have an impact on your money. We're back in a moment. Stay with us. One company is curbing the 250 million tons of waste Americans produce every year through our children. 75% of schools in the United States participate in a recycling program through TerraCycle. The waste management company's founder and CEO, Tom Zaki, is here with me with eco-friendly school supplies. Tom, it's good to have you on the program.
Thanks for having me.
Thank you so much for joining us. So tell us first, how does TerraCycle work? You've recycled products from partnering consumer brands like Frito-Lay,
right?
And you've made them into new things.
That's right. So we go to major consumer product companies like Kraft or Mars or Frito-Lay, and they fund national collection programs where anyone in America can go to TerraCycle.com and for free send us their waste. Over 60 different categories, from shoes to juice pouches, even cigarettes. We pay the shipping, and we give a small donation for every piece of waste collected, and already over $7 million has been paid out for people sending us all this garbage.
Unbelievable.
Yeah,
so
not
they're
bad.
sending you the garbage, and you're creating new products with the garbage. Tell me about the school supplies that you brought with you today.
So we brought 5 different examples to show you what we can do with things that would otherwise end up in our landfill. First, we have here some examples of what we call upcycling. This is by sewing together juice pouches. And today we collect 4% of all the juice pouches in the United States.
It's amazing.
So another example here is a lunch bag. This is made from old tents. You can sort of see the effect. That's, again, upcycling.
Wow.
Now,
So how do you produce them?
We have a team of designers that looks at what can be reused and what can be upcycled. Those are the first two examples. And then there's a team of scientists at TerraCycle who look at how we can recycle the material into a new plastic or a new textile or something.
And where can these be purchased?
They can be purchased online as well as all the world's major retailers like Walmart, Target, Home Depot, and so on.
That's terrific. This is really right in step, right there with the green economy. How big is the green economy? Do you see this part of the economy growing?
I think absolutely. Now, TerraCycle, for example, is a $20 million company, and we've been growing for 10 years straight. We're in 24 countries. And, I see a lot of other green companies in the green economy. I think it's something that's growing very fast, but I don't think it's as big as people think it is. So there's a lot of opportunity to get involved.
Terrific. And finally?
Well, so this is really unique. This is a cooler. What's special about this is the inside of the cooler. This is the best-selling cooler at Walmart today. Is made entirely from post-consumer used chip bags.
Amazing. I love it. Tom, good to have you on the program.
Well, thanks for having me.
Thank you so much. Good
Appreciate
to meet
it.
you. Appreciate what you're doing. Tom Zaki. And finally, let's take a look at the week ahead and the things that may move your money this next coming week. Continuing our look at the retail landscape, Home Depot, JCPenney, Lowe's, and Target will all report their quarterly earnings this upcoming week. Other retailers to watch include Saks Fifth Avenue, Best Buy, Barnes & Noble, and Sears, among others. On Wednesday, we'll get the existing home sales report that's out for the month of July. Also on Wednesday, we will get the minutes from the July FOMC meeting. That could be a market mover. And then on Thursday, President Obama will hit the road for a bus tour about the economy. He's traveling to New York and Pennsylvania. Also, Friday, we'll get the new home sales report, also for the month of July. And that'll do it for us for today. Thanks so much for joining me each week. Keep it right here where we are on the money. Have a great rest of the weekend, everybody. I'll see you again next weekend.